First of all, we will move on to see the different types of doji candles, and then I will start explaining the standard doji candle in today's video, show you the examples and tell you what is the difference between the red and the green bodiless doji candle. And at the end of the video, as usual, we will move on to real chart examples and show you how you can trade with this pattern. If you are a part of our family, welcome back. And if you haven't subscribed yet, subscribe to my channel, and in this channel I will explain all kinds of candlestick patterns and show you how to trade with them. Also, we will have some motivational videos in our shorts. So let's move on to our video. So you've probably seen these things on your candle charts. The bodiless candles with long or small shadows. They are called doji. A doji is basically a pattern where the opening and closing price of a stock are either exactly the same or super close. The name doji comes from a Japanese word that means mistake or error, pointing to how rare it is for a stock to have almost identical opening and closing prices. They are like the market's way of saying, not sure which way to go today, but if you pay attention, they might spill the beans and where things could be headed. It's like the market whispering its secret to you. Keep an eye out of those little crows on your charts. They might just have something to say. In today's video, I will explain standard doji, but first we will move on to all doji kinds and see them what they look like. This is a series where I will explain all kinds of doji candle patterns with exact examples for you to better understand them and know how to trade with this indecision patterns. Here we have all kinds of dojis. Here is a standard doji, which is a bodiless candle with shadows and open and close price of it. Then we have the long leg doji with longer shadows on top and bottom. And then the Dragonfly doji with long lower shadow and no upper shadow. And the opposite of it is the Gravestone doji, which have a long upper shadow and no lower shadow. And at last, we have the 4-price doji with no upper and lower shadows. I will explain all of these dojis in this doji series and show you how to trade with them. But for today's video, we have the standard doji. The standard doji is a pattern that forms wherein the opening and closing price of a security is equal or show a very minute variation. And these are principally considered neutral signals that reflect the state of indecision existing in the market. A doji pattern is shaped like a plus sign or cross, and the lengths of the horizontal and vertical lines of a doji vary depending on the opening price, the high, the low, and the closing price of it. As seen in this image, we have the standard doji, which resembles a plus sign or cross symbol. The upper tip of the vertical line of the doji represent the highest price of the security for the day, and the bottom tip represent the lowest price for the day. These patterns most commonly tell traders about the condition of indecision that is existing in the present market. However, certain investors and traders also use doji patterns to learn about the possibilities of trend reversals and the continuation of existing trends. But if you ask what is the difference between the red standard doji and the green one, so the red doji indicates that the closing price of the security is less than the opening price of it. And the difference between the opening and closing price is, however, so small. And the green doji tells that the closing price is more than the opening price of it. And the difference between the opening and close price is very small. And now the question is that, does it matter if a doji is red or green? Actually, no, it doesn't matter if it's green or red, as the difference between the opening and closing price of doji is very, very small. The small variation between the opening and closing price means that the real body of both red and green dojis are too thin to make any significant difference. Here we are on EuroCAD chart and I'll show you some doji examples here. But remember, the doji candle can never be a signal to enter a trade by itself, and you always need other factors and indicators to confirm that trade. Here we have a star doji or standard doji. Here is another one, and here we have another one, but this is different from the others. This is the morning star pattern. If you haven't watched that video yet, I will put the card on top right corner. This morning star pattern and the doji that appears between these two candles is so different from all others. This standard doji can appear anywhere in your charts, and it doesn't matter where it is, it always shows the indecision in market. So please always use other factors like indicators or other confirmation candle patterns to confirm your trade and enter a position. If you enjoyed this video and learned something, like this video and subscribe to my channel for more candlestick pattern videos.